So, very good evening and welcome to your world, the show that looks at all things money markets and investments. I'm your host, Kuzafi Muchenjwa, and today in the studio, I'm joined by Ephraim Chawoneka, who is the CEO of ICRA, and today we're going to be talking about credit rating. So, this is the show that you need to be logged on if you want to understand all about credit rating. Good evening, Sir Ephraim.
Evening.
Good. Let me get straight into my first question, which I think a lot of people would really want to, get to know. What exactly is credit rating?
Thank you very much for that question. So, credit rating, I want to put it in a very simplistic way. Mm-hmm. And if I can start maybe by what happens in our day-to-day, living, mm-hmm. You'd find that, we lend money to people, yes. Be it family members. And ordinarily, you know that in the hierarchy of your family, sometimes there are certain people that you probably don't want to lend to. Okay. And the basis for that is maybe the record of repaying is not that good. So ordinarily, what then happens is you make a decision as to whether to give them or not to give them, mm-hmm. Based on, the record of repayment. Mm-hmm. So with credit rating, what we are basically talking about, we basically making an assessment of the credit worthiness of an individual, an institution, or even a financial, financial setup. So ordinarily, we are saying, is this institution good enough to repay what it has been given? So with credit rating, there are, players that are involved in there. You must have a rating agency. And a rating agency is an institution that has been licensed. And in our case, the jurisdiction of Zimbabwe, you have to be licensed by the Reserve Bank of Zimbabwe in line with BSD guideline number 4 that gives, authority for an institution to carry out, the credit worthiness of, of an institution or individuals. Then you have the institutions, themselves. Over and above that, there are approved methodologies. There has to be a methodology on measuring, how an institution will perform in terms of its credit worthiness. So that's basically what is involved in credit rating. Right. Yes.
All right. Thank you so much for putting that into light. Now, what is an international credit rating agency tasked with, doing in a country like Zimbabwe?
Yes. So you would find that Zimbabwe is part of the global village, and in terms of financial terms, we participate in a number of activities that happen in the capital markets, and within that capital markets, there is what I would probably call the right uniform, to wear. Right. So you'd find that one of the critical documents that is requested by capital players is the credit rating. Because the credit rating, ordinarily you would find that world over you have almost similar methodologies. You may twitch here and there, trying to account for the different jurisdictions. I mean, Zimbabwe is different from South Africa. South Africa is different from the United States of America. So you'd find that our job is to bring, a document that is understood world over in terms of, profiling, risk profiling of, the various entities, individuals, and even financial instruments. Because it just doesn't end with institutions. We also look at the financial instruments that are in the market. So you have to rate them. So basically, with rating, you find that they are classes. Mm-hmm. You rate for purposes of, determining whether an instrument or an institution falls within an investment grade, mm-hmm. a speculative investment grade, or in certain instances, an institution may come out in a junk grade, okay. Or sometimes it can actually be unrated. In which case, we are basically saying the information that has been provided by the institution in question is questionable. Mm-hmm. So the desire for every institution, for a country, for a financial instrument is that it falls within, the investment grade. But suffice to say, if you are in the speculative investment grade, you are not too far off the mark. The market can actually look at you.
Right.
Yeah.
All right, Mr. Chawonika, let me get this response from you. I now want to find out why is credit rating so important for Zimbabwe specifically?
Thank you for that question. So, credit rating speaks to pricing, of capital. So, in our financial ecosystem, you'd find that we have got borrowers, we've got lenders. So the lenders, you have, the banks and other financial institutions.
Mm-hmm.
So the computation of the cost of capital is entirely dependent on, the rating of an institution. So if you are in an investment grade, for example, the cost of capital will obviously be favorable. It will be lower, just to put it simply.
Okay.
If you are in a speculative investment grade, the cost of capital will be a little bit higher. If you are in the junk or unrated class, the cost of capital is obviously very high.
Mm-hmm.
I think you have heard that in Africa, the cost of capital is too high.
Mm-hmm.
You must be asking yourself,
Why
is the case? Why is that the case? The issue is mainly because sometimes certain institutions and certain countries are not rated. There are 54 African countries, only 33 are rated, which therefore means out of 54, which means close to 40% of African countries. One has to, make an assumption, depending on whatever formula they are using to risk profile you. There is a major saying by Carl Jung, who says the world will ask you who you are. If you don't know, the world will tell you. So they can actually risk profile you and give you a grade that you have no input to. So it is very, very important that as a country, Zimbabwe, credit ratings be embraced, because then we have a fair, pricing of capital at the end of the day. So that's why I would advocate for more of credit ratings in our jurisdiction.
All right, interesting. Now, I just want to also get this, and I think this is also for the benefit of our viewers. As we are discussing, I'm trying just to think, does credit rating also come into play into small, companies, those that are still coming up, startups, or this only focuses on those big companies?
So credit rating stretches from individuals.
Okay.
Yeah. And one of the key factors that has been affecting growth of these small and medium enterprises has again been the cost of capital.
Okay.
Because anyone who wants to start a business, they will tell you that the very first thing they think about is capital, right? And that capital has to be properly priced. And ordinarily, if you are starting, you want patient capital. That in terms of tenure, it has to be long dated. Yes, to answer you directly, even small and medium enterprises require credit ratings, because at the end of the day, that will determine the cost that they will pay for their capital.
Yeah. Well, thank you so much, for putting that across, and I believe now people will get to understand, as we'll be getting deeper into our conversation, that they can also be part of this conversation. So thank you so much. When we come back in the second segment, I now want us to then talk about the grading system, how do you grade people, and organizations and stuff like that. So we'll talk about that in the second segment.
Sure.
Well, thank you so much for joining us in the first segment. This is Your Wealth. We'll be back shortly. Welcome back. It's now time for the second segment of Your Wealth, and today we're talking about credit rating, and I'm joined by Ephraim Chawonika, who is the CEO of ICRA, and this is what we are talking about, credit rating. So please do make sure that you stay locked on and get to understand what the impact of credit rating is, especially on your business. Now, let us continue with our conversation, and my next question is, how does a letter grade rating in a report translate into tangible effects on the lives of ordinary citizens, jobs, and the price of goods?
Thank you for that question. It's a mouthful, but I'll try to dismember it so that I can simplify issues here.
Okay.
So first and foremost, there is a methodology that is used. Normally, there is confusion in the market when you talk about credit bureaus and credit rating agencies.
Okay.
Right? So credit bureaus, they look back into your history to look at whether you were paying your debts and things like that. But then there has to be an extrapolation at a personal level, at an institutional level, as to whether you are going to continue with that kind of trend or you are going to improve. So in the case of the credit rating agencies like ourselves, you would find that we look back into history, yes, but the most critical thing about credit rating agencies is that we give an outlook, right? So we have a methodology that we use. Let's take, for example, banks. We use what we call Camel's rating as a methodology. So we're basically looking at capital, asset quality, liquidity, management quality, and things like that. Those are the things that we input. And when you are to go to a microfinance credit only institution, we use an AMELS, methodology. Okay. Then if you go into the insurance sector, we use RAMELS, as a methodology. But the end result is that we have a grading that comes, and that grading falls either within the investment or the speculative, and then the other two that I spoke about. Now you would find that why I'm bringing out the aspect of the outlook is that if you look at world over, you would find that we may use different letters to depict the rating, but from BBB upwards, that's an investment rate, right? Upwards up to AAA. I think the desire for any institution, any financial instrument, is that it must sit as a AAA, right? And then anything outside BBB, you are now in the speculative grade. If you go into the D and the C, you are now in the almost like the undesirable, segment. So now anybody who's pricing capital will come in and say, okay, this client is sitting on, in the speculative grade. What is the outlook? The outlook is we're basically saying, is he going to be in the speculative grade, or the strategies that he has, speak to an institution that is on an upward? So if we give you an outlook, we can give you a positive outlook, a stable outlook, a negative outlook, or an evolving outlook. So the most desired outlook is positive and stable. Okay. Yes. So essentially, if your outlook is positive, the pricing of capital comes down, and then if my cost of capital is lower, the cost of goods are obviously going to be low. Yeah. And if the cost of goods are low, what does it mean? It also increases the aggregate spending power for an individual. So that's how it works.
Okay.
Yes.
Right. Now, just out of curiosity, since you've been in the business for quite a long time, what's the overview grade that we have for companies in Zimbabwe? Which side do they, play in? AAA or BBB, or they're in the C, D sections?
Well, it's the first thing is that there are institutions that have a statutory requirement to be rated.
Okay.
And we also have a statutory duty to publish these. So they are there on our website. We have carried out, the ratings, and they are posted on our website. From the banking sector, I think the ones that we have done, the majority are in the A grade. They may not be sitting at AAA. We don't have a AAA so far, but they are in that investment grade, which is quite pleasing, and it also augurs well with what the authorities have been saying, that we have a stable financial services sector. So that's where we are sitting. But remember, we, in terms of the products that we offer to the market, we have issuer credit ratings. We have got investment credit ratings. We have got corporate credit ratings. We do bond ratings as well. We do ESG rating, and we also do, scorings at an individual level. So I think it would need more time to be collecting data, to be rating various institutions, various instruments, for us now to be able to make sense of that data. For now, I think the sample is still small, and give it time, we'll be able to even extrapolate in terms of whether overall we are sitting in an investment or a speculative investment grade. Yeah.
All right. Well, thank you so much. Now, what are the main categories of risk that your agency assesses when conducting evaluation?
Right. I think the principal risk that we are looking at is credit risk. Right. The ability to pay when whatever you borrowed is due for payment. But with credit ratings, you have to have a robust assessment of the risks. So we look at even the industry, the industry risk, country risk. We look at that, reputational risk. So ordinarily in rating, we would find that we use 60% quantitative data and 40% qualitative. So from a quantitative perspective, and guided by the methodology that we'll be using, you'd find that when I spoke about banks, we look at capital issues, for example, right? Our banks compliant with the benchmarks that have been put by the authorities, in our case, Reserve Bank of Zimbabwe. Then you also have asset quality. You want to look at the delinquency, position of our loan books. Where are we sitting, even on a comparative basis? So the risks are quite wide. At the end of the day, you must be able to say, having taken consideration of the environment, having taken consideration of the policies that are shaping the environment in which our clients are operating from, and even the internal business strategy for the company in question, putting that all together, do we have a business that we say is in an investment grade? Yes.
Well, thank you so much, Mr. Chawonika, for putting that across. And I think, there's a lot that we can, get into when we're talking about, credit rating. But again, we'll continue with our conversation in the third segment. Well, there you have it, viewers. This was our second segment of Your Wealth. We'll be back shortly. Welcome back to the final segment of Your Wealth, and today we're talking about credit rating, and I'm joined by Ephraim Chawonika, who is the CEO of ICRA, and we're getting to learn more on what credit rating is and what needs to be done in order for you to be someone who is able to get credit out there when you're starting your business. Now, Mr. Chawonika, I just want us to continue with our conversation, and I want to ask you on issues to do with international ratings, right? International ratings are often accused of being overly focused on countries' foreign currency debt, leading to a risk premium that makes all African countries pay more to borrow. Can you please, give us more on that one?
Thank you. It's a controversial, issue, really. I think the key takeaway from that question is the subject of Africa, the premium for Africa.
Yeah.
When you compare how our capital is priced, vis-a-vis other jurisdictions, we seem to be paying much more than others are paying. I would approach that quagmire, from two angles. The first one is that as Africa, we have not yet fully embraced the aspect of credit ratings. So we are leaving it to the world to determine our risk profile. So they will risk profile us the way they want. And in most cases, remember, with credit ratings, like in our case, we are here in this jurisdiction of Zimbabwe. So any activity economically that is taking place, we are also experiencing it. We can speak to the issues that are happening within our own country. But if you are now being measured by someone who's sitting out there, the sources of information might some of it might actually be not the right ones, but at the end of the day, the risk profile will come out, whether good or bad. So I indicated that only 33 African countries are rated as of now, and it then leaves the world to determine, how the others are rated. But also the other angle is that who is doing these ratings? Do they understand the local conditions that Africa, for example, is going through, or someone just looks at things from a helicopter view, and patching up different pieces of information about a country, then making a determination, as to whether you are an investment or otherwise grade. So that's where the controversy now comes in, to say, do these entities that are doing the ratings, do they really understand, what actually happens within Africa? And the comments, obviously, from the African setting is that we don't feel like we are being understood, and that is why there is an outcry to say our story is not being told fully, and as a result, we are paying for it. For your own information, if I can give you just statistics, a study that was done by UNDP says that just the cost of the Africa premium is $75 billion US.
Okay.
Yeah, which is excess interest that Africa pays, or lost funding, put together. So I think with $75 billion US, what kind of infrastructure will Africa, invest in?
Yeah.
So you see, at the end of the day, if you're having to pay that kind of a bill, there's some sort of justification,
Okay.
when there is that kind of a complaint. But the bottom line again is that let's embrace credit ratings. At least let's have a risk profile document that is there, for as a start, as a base for determining the cost of capital.
All right. Well, I like the point that you made, that who is doing, the assessment, which is a very good question. Now, linked to that, I just want to find out, can a domestic credit rating agency help reduce, this costly Africa risk premium by focusing on local currency debt and, unique national assets?
Definitely. If you look at our jurisdiction, Zimbabwe, because as ICRA, we are we are more of a Pan-African, credit rating agency, in that we have a Pan-African view. So we are in Tanzania, we are in Uganda, we are in Zambia, we are in Zimbabwe. We also have offices outside of Africa, in Spain and in the United Kingdom. But you'd find that generally, if you come home here in Zim, if you look at our BSD guideline number 4, released by the Reserve Bank of Zimbabwe, it actually says rating agencies have to have local offices. Their domicilium must be local, and ICRA is local here. You'll find that the reason why it is like that is so that we pick all the granular information that shapes this operating environment. Understand even the currency movement, the migration, from bond to ZIG. If you have to explain that to me, I've a commanding knowledge about that, having served in the banking sector for over 20 years. So we understand the local environment and the fundamentals that shape the environment. So to a large extent, the domestic rating agencies are accounting for the actual environment, not perceived. Actual environment in which our different institutions are working in. I've had a conversation with people to say, do you know that in jurisdictions that are AAA rated, you also have company failures? Equally so, if there is a perception that Africa has got a large amount of risk, do you also know that there are also AA rated companies within that kind of an environment? And for that story to be told, you have to have a domestic based rating agents that is sitting in that jurisdiction.
Right. Oh, thank you so much, Mr. Chawanika, for coming through and shedding more light on what ICRA is all about and what credit rating is. And I think we'll have a part two where we'll then have to dwell much more on Zimbabwe so that we can get, to understand what needs to be done in order for us to move, to those categories where we reach AAA. So I think we'll need to have, another chat and, talk about this. So thank you so much for coming through to Your Wealth.
Thank you.
Well, there you have it, viewers. Thank you so much for joining us right here on Your Wealth. My name is Kudza Film Change. I've been your host. See you next Thursday.